what you can control to get the best interest rate possible. Stay tuned. Hey everyone, thanks for joining us. We are the Hatch Homes Group and it's our Monday housing market update. So we've been talking a lot about buying your interest rate down, but we thought, wow, wouldn't it be so great if we can give people advice on how to get to qualify for better interest rates, right? So we have an expert on today that we're very excited about, Ivory Becker from Incite Strategies. Thank you for joining us.
Absolutely.
How about you tell us just a little bit about who you are and what you do?
Okay, so I own a company called Incite Strategies. We are credit education experts as well as credit restoration experts. So we primarily focus on the home buying side of things. So our clients come to us wanting to improve their credit scores in order to qualify to purchase or just to improve their score so they have better terms on their mortgage.
So a lot of people, come to us and they say, hey, I'm going to go to the lender that offers me the best interest rate. And oftentimes all the lenders we work with are like, oh, it's so frustrating because so much of their interest rate is based off their credit score and they just don't get it. So what are some quick tips on how to improve your credit score to get a better mortgage rate?
Sure. So I think first of all, most people are looking at their Credit Karma app to figure out what their score is and to figure out what to do. It's important to know that whatever Credit Karma is telling them to do is going to be based on a Vantage score and not a FICO score. So Credit Karma can be saying, pay this collection and it's going to improve your credit score. When the score that their mortgage lender is using, it's not going to function the same way. So paying a collection isn't going to improve that credit score. I think that's one of the biggest ways I see buyers wasting their money getting ready for the purchase. And then all of a sudden they don't have enough money left for closing. So that's one thing, is don't go paying your collections. Instead, you want to focus on paying open and active credit cards and get that utilization down on your credit cards. Right now, in a time where we're seeing so much higher balances on credit cards, I think that's the number one thing that's going to help scores the most. And a creative way, if somebody, let's say they have no negative information on their report, we just have high credit card balances, keeping their scores in the 600s, what they can do is move the funds over to some sort of a fixed product. If it's moved from a revolving accounts from a credit card to, let's say, a debt consolidation loan or a personal loan where they're paying it off faster, it's no longer going to adversely impact their credit score because they don't have high utilization. So that's a more creative approach to someone who may not have the funds to pay off all of that debt.
Interesting.
Oh, that's a good tip. Would that be for people with just really high balances or just anybody?
I would say primarily for higher balances, or they just don't have the funds. Maybe all the funds they would need for closing are going to be gone if they pay off their credit cards. But ideally you want your utilization to be less than 10%. So 1 in 9% is considered optimal. And that's what's going to give you the biggest credit score boost, is being within that range. So it's best also to tackle one card at a time, because the algorithm is looking at each card individually as well as the report as a whole. So
what would be considered, what's a high balance? You said, sorry, something about 1 in 9%.
Yeah, good question. So high balance is going to be based on the credit limit. So if you've maxed out a credit card with a $500 credit limit and a credit card with a $5,000 credit limit, they're both at 100% utilization. So it's all based on the balance versus that credit limit. So it's a lot easier to pay off a bunch of, let's say, $200 limits, $500 limit credit cards than it would be to tackle that credit card that has a $10,000 limit. So go after the small cards first and then go after the big guy later.
It's interesting you said have the 1 to 9% would have the biggest impact. So having a 1% usage is better for your bigger boost than 0?
Yes. It's a common misconception that you want to be under 30% or at 0%. 1 to 9% is optimal because it shows you can use the cards, but use it effectively. So the credit algorithm is about using debt properly, not about not using it at all. So I don't recommend carrying a balance long-term or anything of that sort, but if you're getting ready to apply, it can be worth it just to make a small charge to get yourself a few extra point boost.
And then pay it off right away.
Just wait until your score is pulled, you know.
Yeah.
I think I remember when I bought my first house, I didn't have enough credit and they were like, go out and just get a credit card, go like finance a TV or something. We were like, really?
Go to Best
We need
Buy
to
or
go. But that's what we did. We went to Best Buy and we bought a TV on credit, and somehow that qualified us for a mortgage.
It seems like, and this is my question really, is like, how fast does that process work? Like if you go, like if you want to jump from like a 600 credit score to a 750 credit score, which is kind of the bare minimum of getting an awesome rate, how quickly does that happen?
It really depends on your credit profile. Because the credit score itself is made up of the payment history, utilization, credit mix, the length of your credit history as well. So how much age you have in your credit report, and then new credit and inquiries. So everyone's blend of those categories could be different, and they could still all be at that 600 range, right? So it's about finding where you're not impacting the algorithm and filling in the gaps, and finding out where you have these good points that are these good areas in your credit report that are giving you a good score boost, and how do you optimize it? How do you get more points out of that? So vague answer, but there's no pinpointed answer because it is going to vary, but there's some common practices each person can have to get to the highest level for their profile.
Seems like a lot is about ratios, just like what's your ratios?
Yeah.
Yeah, it is for utilization, especially.
I do hear from a lot of people that may say they feel like they're 6 months to 8 months out from buying, and they don't feel like they want to talk to a lender yet because they just don't want that. They don't want to hurt their credit. They feel, do you have anything to say on that?
So inquiries are a portion of the new credit and inquiries category, right? Which is 10% of the credit score. So if it's all about newly opened accounts plus inquiries being only 10% of the score, the impact is very nominal. A lot of people attribute bigger score drops incorrectly to inquiries. Perhaps they got an inquiry, and at the same time the credit report is showing that maybe you used your credit card a bunch that month, maybe you paid the whole thing off that month, but the day that the creditor reported the account to the credit bureaus, it was maxed out, right? So inquiries typically are worth no more than 1 to 5 points. My only exception to that rule is somebody who has extremely limited credit history. If you have 1 or 2 accounts on your credit report, there's not much for the algorithm to go off of, right? So there you go. You're going to see a bigger impact, but the vast majority of people aren't falling in that range. They're somewhere in the middle, having credit history usually of 5 to 7 years, and they're not going to see as big of an impact.
I see. That's interesting. It's like, I always thought that was interesting where, if you want to build your credit, you have to have more debt type of thing.
Yes and no.
It's more like credit lines though. It's just more like having credit lines, not necessarily debt on them, but like.
Well, history, right? History.
Yeah, history.
So the open and active accounts influence your credit the most, right? Because once an account is closed, it's no longer can be predictive of what your behaviors are going to be. You want to see how you're behaving now, what your activity is like now to predict what your activity is going to be like in the near future, right? So the great thing about technology now is there are a lot of ways to improve your credit without having to have debt. We know about credit cards, but you can add your rent to your credit report. You can get utility bills, subscription services added to your report. There's services now that are debit cards that will report to credit. And then there's what are known as credit builder accounts, which are essentially CDs. So essentially a savings account that reports to your credit like a loan, as low as $25 a month. And there's even some that are less. I recommend 25, so it reports to all 3 bureaus. But that can boost your score and help you create a savings. So you have a down payment if you are, let's say, a year out or 2 years out from getting ready to buy.
That's awesome.
Are those things you have to request, or is there like a special way to do that? Okay.
Yeah, you do have to request them. They're
there's
apps.
people that I talk to that have like no credit, and so
Mhm.
or like nothing at all. So that's really cool to know that you can use your debit card.
Mhm.
And it's, you said you have a really cool list of 10 great tips that you can do to improve your credit. So you're
Mhm.
gonna, we'll put that link down below.
Mhm.
Is there any final thoughts or
Yeah,
any?
I had some questions. So, do you ever, I know that like I'm sure you help a lot of people that have like very low or very bad, poor credit,
Mhm.
get higher credit. Do you ever help people that like maybe have good credit and they want like excellent, they want like the best credit they can get?
We do. So when we speak with someone, someone's referred over to us or they find us online, we start by reviewing their credit report and we do an analysis of the report to determine where they're not influencing that algorithm, right? And filling in that gap can pull their scores up. And then helping them understand how they can optimize everything good on their account. So we'll use some of those credit building tools. We'll teach them other methods of making sure their scores remain high as well. If they are someone who has no credit damage, that's going to be the best approach. If there's someone who, let's say they started the loan application process and they were at an 800, and Comcast threw a collection on their report, or we all of a sudden see a utility bill on their report, most of the time those aren't valid. We see a lot of issues with those companies, but that's a whole nother conversation.
Right.
They'll work with us to get that removed from the report. That way they can complete the process with that original 800, because a single collection from someone who had a really strong score can drop them 100 points or more. And we've seen it time and time again. So that can put a stop in the process.
That is so crazy.
Yeah,
Mhm.
But
that's
is it conversely, like as soon as that's cleared within like 30 days, will your score go up again 100
It's
points?
immediate. So once the information is removed from the credit report, it's an immediate increase. The process itself is not an overnight process, so it can create a pause. All creditors, collection companies, credit bureaus have 30 days to investigate. Can you see a removal before that time's elapsed? Absolutely. That's just not the norm, and that's not something I would ever tell anyone to plan on.
Right.
For getting it taken care of. But what's waiting a month when we're talking how much money over time that saves someone?
This is all just a really good lesson in, getting people to really intentionally prepare to buy a house. We have a lot of people that are just kind of waiting right now. They're waiting for interest rates to go down. They're waiting for something to happen that would to get them in that place. While you're waiting, take a look at your credit score, try to see like what you can do just to so when you go to go to buy a house, you are qualified for the best mortgage interest rate that you possibly can.
And the great thing too is if someone doesn't, they're really adamant about not having the lender to pull their credit.
Yeah.
We can do it on our end without it being an inquiry. So we can review the report because we're using a credit monitoring provider. So it's considered an educational pull. So
That's
if
cool.
they're super adamant, there are options out there still. And it takes, it can take, if you're in the 4 to 500 credit score range, it's only about 6 to 8 months to get you there, as far as worst case scenario, high sixes, best case scenario, mid sevens. So if people are sitting there and waiting, now is the time to work on their credit so they can get there.
Yeah. Well, so we'll post your 10 tips for getting, what is it called? It's like 10 tips for getting the optimum
ways to get your credit ready for home buying. I think
there
that's
you go. And in the meantime, how can people find you?
Yes, so we can be found online. Feel free to email me or call me too. Online, our website's incitestrategies.credit. And then you're welcome to also email me. It's Ivory at incitestrategiesllc.com. It's super long. I'm sure we can post that somewhere.
Yeah.
And then our phone is 503-395-3092. We do work in any state. So if you have, a buyer moving or something of that sort, that's perfectly fine. We're in every state but Georgia. So that's the only one. And I would say, just even if your buyer is saying, hey, this is valid collection, this is a valid issue, encourage them still to seek professional help. whether they work with us or not, it's not the issue. I just want to make sure they understand the laws and how to go about disputing something. Because it's not about whether you owed a debt, it's about whether the way it's reporting is compliant with the laws, which most of the time it's not, and whether a debt collector is following the laws, which most of the time they're not. Which is how this year we've gotten, we'll have over 1 million removed this year for our clients. We're at $958,700 something dollars so far this year that clients did not have to pay. So that's money they can now use for the purchase. So there's a lot more hope than people realize.
That's really great. Yeah. Wow.
Very cool.
Well, thank you so much. I just learned so much, and I'll be giving your number to some people for sure.
There's a lot to know about credit.
Yeah, I'm sure there's a lot more to know. This is really helpful. Thank you so much. Everyone, reach out to Ivory if you have any other questions too. And remember to like and subscribe.
Thanks for having me.
Thanks.